The motorcycle market just collapsed, and this time it's not a scare. Prices are falling, dealerships are drowning in unsold bikes, and buyers have had enough. This isn't a downturn, it's a reckoning. If you own, ride, or plan to buy, this video will change everything you thought you knew. The illusion shattered. 5 years ago, the motorcycle market looked invincible. Prices were rising, but demand still seemed strong. A brand new cruiser that once sold for $15,000 began creeping up toward $20,000, then $25,000, and in some cases even $30,000. Manufacturers chalked up the increase to inflation, supply chain disruptions, and the global pandemic's lingering economic ripple. But beneath the surface, a dangerous illusion was forming, one where price hikes were mistaken for market strength. Dealerships and manufacturers convinced themselves that motorcyclists would continue paying more indefinitely. After all, bikes were being marketed not just as transportation, but as premium lifestyle products. The logic was seductive. Riders would tolerate price hikes if the bikes came with just enough tech, branding, and prestige. But that assumption ignored a simple economic reality. Income did not rise at the same pace as motorcycle prices. As new models entered the market with increasingly bloated MSRPs, many buyers simply backed away. The pool of eager, qualified buyers began shrinking. Suddenly, showrooms that once turned inventory quickly were full of untouched motorcycles. The fantasy that demand would remain elastic was shattered when buyers stopped showing up. And once that confidence broke, the crash began in earnest. As the illusion faded, the next shock came from an entirely different direction. One that hit buyers where it hurt most, their wallets. Don't get caught overpaying for junk gear while bikes are on clearance. We link the stuff that's actually worth it. Proven helmets, jackets, locks, and tools that deliver real value. No fluff, no markups. Check the description and gear up smart while the industry panics. Financing killed the fun. If motorcycle prices were the spark, financing conditions were the gasoline that turned hesitation into collapse. In the past, financing a motorcycle was relatively accessible, even for first-time buyers. Interest rates hovered around 3 to 5%, and dealerships worked closely with lenders to get nearly anyone on the road. But as inflation spiraled and the central bank raised rates to tame it, that entire landscape shifted overnight. Now, interest rates on motorcycle loans are climbing past 9%, 10%, and even higher. For buyers with less than perfect credit, rates between 13 and 18% have become the new normal. That means a rider looking to finance a $25,000 motorcycle could easily end up paying more than $35,000 over the life of the loan. And that's assuming they can even get approved in the first place. Loan rejection rates have surged as lenders tighten their standards, wary of a consumer credit environment showing more signs of stress by the month. People with solid jobs, decent credit, and stable finances are still getting denied or saddled with unaffordable monthly payments. The appeal of buying a new motorcycle through financing, once the default route for most riders, is now a financial trap that fewer people are willing to walk into. This shift didn't just reduce the number of transactions, it fundamentally altered the psychology of the buyer. Even those who could afford to buy began to pause and reevaluate. And as affordability vanished, so did another critical group that once drove motorcycle sales forward: new and younger riders. We hunted down insider data, spoke with dealers, and exposed what's really happening behind those showroom windows. All you have to do? Hit subscribe and back the truth. Riders walked away. The backbone of the motorcycle market has always relied on two groups: loyal repeat buyers and younger enthusiasts looking to enter the sport. Today, both have hit the brakes. Gen Z in particular is largely uninterested in buying motorcycles at current price points. Many are still dealing with student debt, high rent, or the basic cost of living crisis, and a $15,000 entry-level bike is not even a consideration. For them, motorcycles are becoming more of a streaming fantasy than a realistic purchase. Even younger millennials who grew up idolizing sport bikes or cruisers are opting for electric bicycles, rideshare services, or compact urban vehicles instead. The emotional pull of two wheels has not disappeared, but the financial leap is simply too great. Meanwhile, experienced riders, the ones who might have once traded in their 3-year-old Harley or BMW for a shiny new model, are holding on to their bikes longer. Why? Because new models are offering marginal upgrades at inflated prices. ABS and LED lighting are no longer novel. A digital dash is nice, but it doesn't justify a $10,000 premium. Riders are realizing they can maintain and enjoy their current bikes for far less than the cost of upgrading. This dual retreat from both the top and the bottom of the market is suffocating sales pipelines. First-time buyers are gone. Repeat customers are sitting tight. And without either group moving money, the market is bleeding momentum. As riders walk away, the structural weaknesses that have been festering in the industry are finally exposed, and the consequences of that realization are just beginning to unfold. The inventory time bomb. Across the country, dealership showrooms are no longer buzzing hubs of activity. They're warehouses of stillness. Rows of brand new motorcycles from Harley-Davidsons to Yamahas sit untouched. Some of them have not moved in over 200 days. What used to be considered hot merchandise is now gathering dust. The problem isn't just a lack of foot traffic, it's the crushing financial burden that comes with unsold inventory. Most motorcycle dealerships do not purchase bikes outright. Instead, they rely on floor plan loans, a system where the manufacturer provides the bikes on consignment while charging interest monthly. This model works during times of high turnover, but in today's stalled market, it's a disaster. Every day a bike sits unsold, the dealer pays interest. Over time, those interest payments become a death sentence for the business. Many dealers are now sitting on hundreds of thousands of dollars in aging inventory, each unit dragging their balance sheets deeper into the red. And it's not just about money, it's about space. Showrooms are packed, storage lots are overflowing, and sales floors are becoming visual proof of a collapsing market. These bikes were priced during a different economic reality, one that no longer exists. Now, with floor plan costs rising and loan terms tightening, the time bomb is ticking louder. Dealers must sell bikes to stay solvent, but slashing prices comes with its own consequences. But even aggressive discounts are no longer the magic bullet they once were. Why discounts aren't working? Desperate to move stock, dealerships have turned to the oldest trick in the book: slash the price. And slash they have. Some brands are offering markdowns of up to $5,000 off the manufacturer's suggested retail price. Others are throwing in 0% financing for up to 36 months. Promotions once reserved for end-of-season clearance are now being rolled out across entire lineups. The problem? Buyers still aren't buying. It's not that consumers don't want motorcycles, it's that they know the prices are still artificially high. The industry overreached, and now consumers are calling the bluff. Even after significant price cuts, many motorcycles remain out of financial reach or perceived as bad deals. Riders are waiting, watching, and anticipating deeper discounts. There's also a psychological factor at play. Many consumers no longer trust original equipment manufacturers to price bikes fairly. When a Harley-Davidson drops in price by $5,000 overnight, it raises eyebrows. Were they overcharging before? Are they hiding the real value? This broken trust lingers in every transaction. It's no longer enough to say, "Great deal." The buyer must believe it. And with news circulating about further inventory backlogs and potential manufacturer bankruptcies, that belief is hard to come by. Discounts may look generous on paper, but in the mind of the modern buyer, they're just the beginning of a longer, steeper descent. While new bikes stagnate, the used market is beginning to collapse under its own weight, and it's dragging everything else down with it. The used market wrecking ball. The used motorcycle market, once a healthy safety valve for affordability and turnover, has now become a wrecking ball, tearing through dealership stability. The first blow came from repossessions. As loan defaults surged, up nearly 30% in the past year, lenders began seizing motorcycles at record rates. These repossessed units are flooding the market, creating a surplus that has shattered resale values. Used bike prices have fallen by as much as 35% in some segments. That means bikes worth $10,000 last year may now fetch closer to $6,000 or $7,000 if they sell at all. The result? Dealers are rejecting trade-ins or offering insultingly low values to avoid adding more depreciating stock to their lots. It's not uncommon for owners looking to trade up to hear that their bike is worthless in current market terms. This dynamic is paralyzing the customer base. Riders who want to upgrade can't get enough value from their current machines. Dealers don't want to risk holding used inventory that won't move. And buyers, seeing great deals on nearly new bikes, are choosing used over new, further compounding the new bike inventory crisis. What was once a reliable churn between used and new bikes is now fractured. And without healthy trade-in cycles, both the new and used markets spiral deeper into dysfunction. And while large dealership chains are barely keeping their heads above water, smaller independent dealers, the heart of the motorcycle world, are disappearing entirely. Independent dealers are dying. For decades, family-run motorcycle dealerships formed the backbone of riding communities across the country. They weren't just places to buy bikes, they were trusted hubs for local riders, events, service, and shared culture. Today, many of these independent shops are shutting their doors for good. Unlike large corporate chains, independent dealers don't have access to vast cash reserves or diversified capital structures. They rely on consistent foot traffic, seasonal promotions, and loyal customers. But in a market where inventory sits idle and every month brings rising operating costs, these smaller businesses can't hold on. Many are liquidating inventory at a loss just to pay creditors and exit before things get worse. The result is more than just economic, it's emotional. Local dealerships often provided a sense of community, especially for older riders or those in rural areas. As these places disappear, so does the personal relationship many customers had with their dealership. Trust erodes when the only remaining option is a corporate superstore that sees each customer as a transaction. And without local competition, buyers face fewer choices, longer service wait times, and increasingly standardized pricing models that benefit the brand, not the consumer. This consolidation marks a fundamental shift, not just in how motorcycles are sold, but in the cultural fabric of motorcycling itself. As independent dealers vanish and buyers hold back, the entire sales infrastructure is breaking apart, and manufacturers are next in line to feel the shock. Production cuts and layoffs. Across the global motorcycle industry, the mood inside manufacturing plants has shifted from ambition to survival. The optimism of recent years has crumbled under the weight of a demand-side collapse that few executives anticipated. Harley-Davidson, BMW, Motorrad, and Honda have all slashed their production targets, with internal memos and public announcements confirming significant cuts to output across core models. At Harley-Davidson, a company once synonymous with confident expansion, production has been scaled back by 25%, a brutal reversal following their aggressive post-pandemic ramp-up. BMW Motorrad has reduced its output by nearly the same margin, citing unsustainable inventory levels and continued market softening in both Europe and North America. Honda, often seen as the stable giant in the two-wheeled space, has quietly laid off hundreds of workers across its overseas manufacturing hubs, especially in Southeast Asia, where mid-range and commuter motorcycle production was once booming. Behind these cuts lies an even more troubling signal: the freezing of research and development budgets. In an industry that survives on evolution and excitement, the halt of innovation is not just a pause, it is a surrender. Planned releases of updated cruisers, sport bikes, and new tech packages have been postponed indefinitely. Factory tooling updates have been shelved. Engineering teams, once tasked with dreaming up the next generation of motorcycles, have now been redirected toward cost reduction efforts and liquidation strategies. In previous downturns, manufacturers leaned on R&D to bounce back with breakthrough models. But today's cost-cutting leaves little room for creative risk. The result is a deep internal disruption that goes far beyond temporary layoffs or quarterly adjustments. It signals a loss of momentum, a systemic slowing of the industry's lifeblood. This is not about riding out a bad year. This is about reassessing everything from production volume to global strategy. As workers are sent home and innovation stalls, the companies that once led with confidence are now merely trying to stay afloat. As plants slow and engineers fall silent, a more global crisis tightens its grip. The global cost disaster. At the heart of the motorcycle industry's unraveling is a harsh truth. The cost structure that manufacturers relied on for years is no longer sustainable. The global cost crisis, once seen as a temporary post-pandemic spike, has revealed itself to be a more permanent burden. It began with tariffs. As trade tensions escalated between the United States, China, and Europe, the motorcycle industry became collateral damage in a broader economic war. American brands face steep import fees on critical components. European and Japanese brands exporting to North America saw their pricing models disrupted. Supply chains fractured. Margins shrank. And the customer? They bore the brunt through sticker shock. Next came raw materials. The cost of aluminum, rubber, and steel, all essential for motorcycle construction, rose sharply. Shipping expenses, which had already ballooned due to fuel price volatility and port congestion, remained inflated even after global logistics networks supposedly normalized. A shipping container that once cost $3,000 to move across the Pacific now costs upwards of $7,000, a cost that gets passed directly to dealers and consumers. But the real failure was strategic. Many manufacturers believed these cost increases would be temporary. They assumed that pandemic-related disruptions would fade quickly and that demand would remain strong enough to justify pricing at the top of the market. This was a bet on continued consumer enthusiasm, a bet they lost. Manufacturers priced motorcycles based on pandemic-era demand, but failed to recognize that the very economic conditions that propped up that demand, stimulus checks, low interest rates, and rising disposable income, were temporary. When those supports vanished, so did the willingness to pay $28,000 for a cruiser or $17,000 for a sport bike. Now OEMs are stuck. They have inventory built under inflated cost assumptions, priced for a market that no longer exists. Slashing prices means taking massive losses. Holding the line means choking on inventory. It is a no-win situation that continues to paralyze the industry. Until global costs stabilize, and more importantly, until brands relearn how to build for affordability, the motorcycle sector will remain in limbo. And nowhere is that miscalculation more devastating than in the electric segment, where fantasy has collided with financial reality. The EV motorcycle fantasy dies. For years, electric motorcycles were positioned as the future of two-wheeled transportation. Media campaigns, government incentives, and executive optimism all aligned around the idea that electric was not just coming, it was inevitable. Yet in 2025, that fantasy is unraveling. The brands that led the electric charge, Zero Motorcycles, Harley-Davidson's Livewire division, and BMW's CE04, are now buried under unsold stock and dwindling consumer interest. The promise was seductive: low maintenance, instant torque, and zero emissions. But in practice, electric motorcycles have failed to deliver on the expectations of the average rider. First, the cost. A Livewire 1 still commands over $22,000, while Zero's premium models start around $20,000. That is price parity with top-end gas touring bikes, yet without the same range, refueling convenience, or aftermarket support. Riders expecting a revolutionary experience instead found limitations: short range, long charge times, and a network of charging stations that is patchy at best, non-existent at worst. Range anxiety remains a dominant barrier. While a gas-powered bike can be refueled in minutes and deliver over 200 miles on a single tank, electric motorcycles often require hours of charging to achieve just 100 to 120 miles of range. For urban commuters, that might suffice. For touring riders and weekend enthusiasts, it is a deal-breaker. Even in markets where EV adoption is rising for cars, motorcycles have lagged behind due to both practicality and emotional disconnect. Government subsidies and tax incentives have done little to tip the scale. Buyers remain skeptical, especially with concerns over battery degradation, long-term maintenance, and resale value. Unlike electric cars, where brands like Tesla have proven resale strength, electric motorcycles have yet to establish any track record of long-term value retention. And when owners look to trade in or sell, they are often shocked by how little the market is willing to offer. Faced with these realities, manufacturers are pulling back. Livewire has paused new product announcements. Zero has issued statements suggesting a refocusing of its production roadmap. BMW's CE04, once celebrated as the future of urban commuting, is quietly being offered at heavy discounts just to clear inventory. The result is clear. Electric motorcycles, once hailed as inevitable, are now at risk of becoming a failed niche, a technological promise that never crossed the chasm into mass adoption. As the electric dream dims, the entire industry must reckon with what comes next. Now let's shift focus to the flood that's reshaping the used market faster than any marketing campaign ever could. Repossession tsunami. As the motorcycle market craters, the financial damage is moving at high speed, and repossessions are the front line of this economic unraveling. In the past year alone, motorcycle repossessions have surged by 28%, the steepest increase since the financial crisis of 2008. What was once a niche financing issue has become a full-blown tsunami of defaults, forced returns, and lender fire sales. Buyers who once stretched their budgets to own that dream Harley, Indian, or BMW are now finding themselves unable to keep up with rising loan payments. The triple threat of higher interest rates, soaring insurance premiums, and stagnant wages has made motorcycle ownership unsustainable for a growing number of riders. Loans that once felt manageable now feel like traps as monthly obligations balloon and other living expenses tighten the vice. For lenders, the strategy has shifted from growth to damage control. Banks and financing companies are no longer willing to work with delinquent borrowers. Repos are happening faster and more frequently. Motorcycles are being seized and auctioned off at deep discounts, often at prices so low they undercut dealership trade-in values by thousands. This creates a vicious loop. The more repossessions hit the market, the more saturated the used bike segment becomes. Prices fall further, making new bikes look even more overpriced by comparison. Dealers that took trade-ins based on now obsolete pricing data are stuck with negative equity, and many are refusing to accept new trade-ins altogether. What makes this repossession crisis so devastating is how quickly it accelerates inventory collapse. In less than 12 months, lenders have gone from cautious optimism to emergency liquidation. And the impact doesn't just stop at banks, it spreads through every corner of the motorcycle economy. But as repossessions rise, it's the consumer who is ultimately left holding the risk. And that risk is no longer just about high prices, it's structural. It's baked into the very act of trying to buy a bike. The consumer trap. What was once a lifestyle decision has now become a financial minefield. Buying a motorcycle in 2025 means navigating a landscape filled with hidden costs, regulatory hurdles, and punishing interest rates. Even for experienced riders, the dream of ownership is being replaced by financial anxiety, and for new riders, it's becoming nearly impossible to justify. Let's start with insurance. Premiums have skyrocketed, with some riders reporting their rates doubling in the past 2 years. Factors include rising theft claims, increased parts replacement costs, and insurers reclassifying high-performance or large displacement bikes as luxury liabilities. In states like California and Florida, insuring a mid-range sport bike can now cost more than insuring a compact car. Then there's financing. 1 in 5 motorcycle loan applications is now being rejected outright. Banks are tightening lending criteria across the board, and anyone with less than excellent credit faces steep hurdles. Even those who do qualify are often stuck with interest rates north of 10%, sometimes as high as 15% on used bikes. These numbers turn what was once an aspirational purchase into a long-term financial burden. And the worst part? Buyers no longer feel emotionally rewarded for their risk. The price-performance gap has widened so much that even high-end motorcycles no longer feel worth it. A $25,000 Harley no longer delivers the satisfaction it once did when you know its resale value might plummet by 30% within a year. The psychological shift is profound. Motorcycling, once sold as freedom on two wheels, now comes with the same risk assessment as buying a second car, and often a worse financial outlook. That shift in perception could be the most damaging trend of all because it's not just about affordability anymore. It's about trust. And that brings us to the question everyone's asking: what now? The final verdict: buy, sell, or wait. For riders caught in this market freefall, the biggest question is not what went wrong, but what to do next. Should you buy now? Should you sell? Or is waiting the smartest move of all? If you're looking to buy, this might be the best opportunity in years, but only if you know exactly what you want and are negotiating aggressively. Dealerships are slashing prices on overstocked models, offering 0% financing deals, and throwing in gear packages just to move inventory. If you're paying cash and have strong bargaining power, there are serious deals to be had. However, if you're considering a finance-heavy purchase, caution is warranted. Interest rates remain high, insurance costs are unpredictable, and resale values are falling. The smart move might be to hold off for another 6 to 12 months. Many industry analysts believe that late 2025 or early 2026 could bring even deeper discounts as the inventory glut worsens and more distressed dealers are forced to liquidate. For those thinking about selling, the advice is simple: do it now. Trade-in values are still dropping and repossessed bikes are dragging the entire used segment downward. If you wait too long, you may find your motorcycle worth several $1,000s less than it is today, and that gap is growing weekly. And if you're undecided, then wait. The market is still in freefall. There's no rush to jump into a declining asset class. Let the market stabilize. Let the brands show how they plan to recover, then make your move. Because if there's one thing we know for sure, it's this: in a collapsing motorcycle market, patience could be worth more than horsepower. So, where does that leave us? The market collapsed. The discounts aren't working. Riders are walking away. But what about you? Are you buying, selling, or waiting it out? Drop your move in the comments and tell us why. And if this video helped you see through the smoke, hit like, subscribe, and share it with someone about to make a $25,000 mistake. Because in a world of dealer games and collapsing values, information is your only real protection.